Good afternoon, everyone. Welcome. Thank you for joining us today for the annual Morris County Economic Development Corporation meeting for 2018. For those of you who don't know me, I'm Megan Huncher, the Executive Director of the Morris County EDC. Today we are broadcasting the in-person presentation through a live webinar, which is being recorded through this device up here. I'm hopeful that everything will go without a hitch, but thank you for those who are on the line in advance for your patience if we do have to work through any technical difficulties. For those of you on the webinar, you are muted, but you can ask a question or alert us to any difficulties hearing or seeing the presentation by typing on the side. Robert Wantenhouse, who's the Economic Development Manager for the EDC, is manning the computer. So firstly, I want to thank our sponsors for today's event. That is Value Research Group and JLL, who will be presenting today, so thank you for sponsoring. I also want to welcome back our speakers who have graciously rejoined us this year, so you'll be hearing from them today. Before we begin, I want to point out a number of events that are upcoming, some of which are before you. On the table, we have the Chamber's annual event on February 2nd, which is coming up within the next couple of weeks. We also have an event with the MCEDC Life Science Committee, which is essentially the future of healthcare and how that affects your business. We also have a Save the Date, which is not in front of you, but I do ask that you save the date for our March 16th annual awards event, which will be at Wyndham Hamilton Park. And that is the annual celebration of our largest real estate transactions within the county. We will have a panel and a keynote speaker. So that's March 16th. So there'll be more information sent out about that shortly. And now to our presentation today. Today, the speakers will address the office, industrial, retail, residential markets, and also demographics within the county and generally. This is an opportunity for us to look back in 2017 and also look forward to some of the trends that we may be anticipating in 2018 and beyond. Our first speaker today is Howard Weinberg and his team. They are commercial real estate brokers, and also with him is Steve Janko, head of research, and Iggy Armenia, who's also in research as well. So they'll be presenting on office and industrial within the county. Following Howard, we'll hear from Michael Elms, who's our commercial and residential real estate broker in the county, and he will also be giving us an overview on residential trends that we're seeing. And then we also, fortunately, from Ohio, we have Mark Hayes with Stanberry Development, who has his finger on the pulse with retail throughout the county and the country. Stanberry, if you don't know, is planning to develop rather unique mixed-use development on Route 10 in Parsippany. And then finally, last but not least, is Christine Marion, our very own Director of Planning for the county, who will be giving us an overview of demographics and various trends that she's been seeing, and with plenty of graphs and data represented. So you won't be disappointed. We will also be making this both the webinar and the presentation available on our website afterwards. So if you miss anything, it will be available. And then we also will be taking questions after each speaker briefly. So feel free to jot some notes and raise your hand as well. And please help yourself to the food throughout the presentation as well. We have plenty of it. So without further ado, Howard.
Thank you, everyone. Megan, thank you. Robert, thank you. I know Paul is here somewhere. I want to thank Paul also to having us. We're here last year. We gave a presentation for commercial real estate. This has to deal with office and industrial. Steve Janko is head of JLL's Tri-County Regional Office for Research. Iggy Armenia is our Vice President of Research for Industrial Real Estate. And they're going to, basically, I'm going to give a quick overview. They're going to drill down, and then hopefully later on, if you have questions, one of us can answer the question. So the market is very similar to last year in the sense that the office market is just floating along, high vacancy factors, no rent appreciation, and Parsippany is a significant weakness within the market, Morris County. And also, all throughout New Jersey, the office market is weak. Morris County seems to be particularly weak. From the industrial side, it's red hot, totally different than the office side of things. It's just different markets and sub-markets within the New Jersey are particularly strong. Morris County is kind of a lagging indicator, and even Morris County is particularly strong with a low vacancy factor of 6%. Small units are in demand. Rental appreciation is going through the roof, and sale prices are going through the roof, and it's just been an overall, 17 was just an extremely strong market. So I'm going to let Steve start off on the office side of things. He'll drill down on some particular details of the office side. Iggy will do the industrial side, and then we'll come back and answer any of your questions. I guess we're going to do questions later at the end. And I'll just talk about one particular project at the end after Iggy's done.
Great, thanks, Howard. Kind of glad that you gave bad news about the office market rather than me, in case anything got thrown at you or anything like that, so I'm off the hook. I'm going to start with just an overview of Morris County. I know my time is brief here, and we have a lot to get to, so that's why I'm going to work off some notes to keep me on track. Really, the trend that we saw in Morris County was really diminished leasing volume in 2017. And again, not just Morris County, but New Jersey as a whole. For the state, we saw about 7.1 million square feet of leasing transactions. And from a leasing perspective, we're talking about new deals as well as renewals, extensions, subleases, and so forth. This compared to 2016 is about a 45% decline. In Morris County alone, we had a little over 1 million square feet of transactions. Similar story to New Jersey. This is about a 50% decline from 2016. Morris County, vacancy rate only declined about 10 basis points. So we went from 32.9% to 32.8%, if you want the actual numbers. Class A space, pretty consistent as well. We're still above 34% from a vacancy standpoint. Put that in perspective, for New Jersey, we've been around 25% vacancy rate now for the past 5 to 6 years. One of the positive trends that we're going to see in the marketplace and that we're starting to see already that's going to continue to accelerate, I think in 2018 and going forward, is going to be this redevelopment of vacant office buildings, demolition of the older buildings that have been overshadowing the market that's contributing to this 30-plus vacancy rate that we're stuck at. And this really has to take place because we don't have the developable land for the residential, the retail, the other components that are in demand in the market. Looking ahead for 2018, we're tracking about a little over 1 million square feet of office buildings statewide that are probably going to be demolished, repurposed, or turned into some other type of use. What's going to be positive is that's going to help pull our vacancy rate lower when these large blocks of space get taken out of the market. Again, just illustrating where we are in terms of the vacancy rate. We could see still New Jersey, it's been around right below that 25% range. Morris County remaining above the 30% range. Turning to leasing volume, as I mentioned before, we could see in red here, highlighting 2017, just under 1.1 million square feet. Compare that to fourth quarter 15 and then into 16. What stands out here is the third quarter of 16 reflected the Allergan leasing of about 431,000 square feet for their new headquarters at Geralda Farms. So as a result, we had that spike there in the third quarter. And that not only represented a large transaction in 2016 for Morris County, but as the state as a whole. What I think is interesting here is, again, when we're talking about the leases, and in this case, we're looking at 10,000 feet and greater that took place in 2017 in Morris County, is just to show from a pie chart standpoint that over 70% of those leases were in that smaller range. And, you know, when you're adding up cumulatively these smaller leases, they're just not getting the big bang that you're getting when you're doing 50,000, 75,000, or 100,000 foot leases. So as a result, this is why we're seeing the diminished leasing volume taking place. Among the largest transactions that we saw in Morris County last year was a renewal of Travelers Insurance, about a little over 80,000 square feet. That was at 445 South Street in Morristown. And then we also had McCann, Torrey Lazur, moving out of 20 Waterview Boulevard and taking about 71,000 square feet at Sylvan Way in Parsippany. Again, not new entry into the market, more or less lateral movement within Morris County, in this case, Parsippany market. And again, that's been a trend that's been going on in the market too, is the movements and the musical chairs that we see going on in the office market. And this is really helping to keep our vacancy rate neutral. What we've done here is looked at Morris County as a whole, and the major submarkets that make up Morris County that we're tracking. Parsippany is obviously, you know, as Howard was saying, a large portion of Morris County, what we're tracking. We're tracking about 15 million square feet of rentable office space in the Parsippany market, and that includes, as you can see on the bottom there, some other towns as well, so not just Parsippany. And this is about 60% of our office space in Morris County. So it's pretty evident how closely Morris County mirrors one another, with Parsippany and Morris County being kind of in sync with one another there. As of the end of last year, out of that space that was available, that 15 million square feet, more than 5 million square feet was available in the Parsippany submarket, with about 60% of this space being classified as Class A. And of course, classification can be subjective. We have those conversations in our office all the time, buildings that we're tracking as Class A that we feel at this point probably could be a B+ type of building just based on their age, their amenities, and so forth. And furthermore, what's contributing to that vacancy rate is at least there are just about 10 buildings within the Parsippany submarket where we're tracking over 100,000 square feet in each that were available in 2017. Western Route 80, you can see here what stands out there is that we still have the former BASF campus, 1 million square feet that's on the market there. So until something is done there in terms of whether it's redeveloped or some other type of activity, a major portion of that 60% is that BASF campus. Taking a look at rents, we can see Morris County has trailed the state somewhat. For the state, for Class A, was just below $29.60. We see Morris County just above $29. And what's really been helping to drive some of these rental rates, and to keep in mind that these are asking rental rates for buildings. So think of sticker price on a car. What's been driving this is really some of the new space that's been coming on the market that's being marketed at higher asking rental rates. So we're averaging out those rental rates, and we're getting our asking averages there. But you know, again, despite this increase, tenants are continuing having opportunities in the market. I think one of the challenges for companies that are going to be looking for space, not only in Parsippany but Morris County as a whole, is the demand is going to be for the high-end, newer Class A space that's really in short supply. We haven't had a construction pipeline adding new space in the market, so it's kind of like we're stuck here. It's like tenants want new space, but we don't have the pipeline of new space taking place in the market. So as a result, that redevelopment is looking to fill that void in the market. And just wanted to highlight, I think one of the most significant transactions that we did see in Morris County last year was one of the largest office sales was Barclays purchasing the crossings at Jefferson Park in Parsippany, or in Whippany, I should say. These were a campus of 3 Class A buildings, a little over 500,000 square feet. Barclays was already a tenant in the park, and I think this shows a couple different things. One is the commitment that Barclays wanted to make to Morris County and to this campus by establishing a new operations center here. And I think the other interesting aspect is, again, that redevelopment play that we're going to see more of in our office market. Vision and Rubenstein Partners here, what they've done is they acquired this campus late 2012, launched a multi-million-dollar revitalization and rebranding of the site. including redeveloping the former powerhouse there into a great business center, amenities, health and wellness center to really anchor this campus. And as a result, it's a self-sufficient campus that helps promote that work-play environment that we hear about all the time, and that more and more companies are continuing to look for when they're looking for space. And one of the last, I think parting points that I'll leave there is we're seeing so much more of labor playing a role in where companies want to locate. Our unemployment rate for the state, being under 5%, there is a challenge to find labor. And whereas, several years ago, maybe not a big decision in this real estate decision-making process was the HR department, but now we're seeing definitely a louder voice in terms of the real estate decision saying, hey, if we move our company to this location, we may risk losing X% of our workforce. Where are we going to get the workers from? How are they going to get here, and so forth. So that work-play, live-work-play environment that we're hearing so much about is definitely nothing that's going to be going away anytime soon. So I'll leave it there.
All right, so now that Steve's depressed you with the office market, I'll try and bring us back up with the industrial market. So as Howard alluded to, if the industrial market in 2016 we coded as red hot, I would describe it as white hot for 2017. Just to give a quick intro into industrial, what makes it tick, why New Jersey, it all comes down to population and access to population, right? We're in the largest metro area in the country, so we have the largest, it stands to reason, we have the largest industrial market in the country, right? All of the goods that are consumed in Manhattan at some point had to make a stop in New Jersey or in Pennsylvania. So when we're talking about, I cover the Northeast Industrial Region, when we talk about the Northeast Industrial Region, I'm including Pennsylvania and New Jersey. Obviously for this, we're focused more microly on New Jersey. So for the most part, the majority of your industrial assets follow the New Jersey Turnpike, right? That's why when you drive down, you can see a lot of the big boxes and all the big names. That continues all the way down into South Jersey and continues to spread that way. It also runs out into the Lehigh Valley in PA, which is an important point that I'm going to touch on later, that the market is starting to expand and sub-market boundaries are disappearing, which is going to reshape the sort of western half of New Jersey, or at least start to, because traditionally, if you weren't right along the I-95 corridor, you were considered a secondary submarket or a tertiary submarket because you lacked that access to New York City, you lacked the access to the population. And when e-commerce is changing the way we consume goods, the speed at which they deliver the product is paramount, and so proximity and being able to penetrate the population becomes one of the key drivers. So Morris County over the past few years has seen a tremendous increase in rental rate growth, as has New Jersey. Reason being is what I just touched on. New Jersey has seen a tremendous influx of demand coming from e-commerce related activities. Retailers are having to change the way they do business, as opposed to going from one consumer, as opposed to going to one store and refilling one store here and one store here and one store here. Now they need to reach everyone at their homes. So the number of delivery locations they have to make is increasing exponentially. And as a result, they move out of brick and mortar locations and into more industrial locations, right? So as we all heard, we've seen a shift away from retail, or at least a shift in retail, to more industrial facilities. And as you can see, that's had a tremendous impact on rents since really 2014, 2015. It's been an astonishing growth. Markets like the Meadowlands, right, which are considered the most Class A of submarkets, because think Secaucus, right next to Lincoln Tunnel, easy to get in the city. They've seen 10, 20% year over year increases in their rental rates. Morris County, which is a little bit further out, lacks some of that access has seen similar growth rates, but not to the same extent. And we can see here in a comparison of vacancy rates, it's a good idea to compare the Meadowlands to Morris County. You can see Morris County's cut its vacancy rate in half as a result of swelling demand. Some of that demand starts to spill over as markets like the Meadowlands and the rest of North Jersey reach a 4% vacancy rate. That demand has to spill over. Tenants who can't find the 50,000 square foot warehouse that they wanted right next to Lincoln Tunnel move out this way. They may be priced out of the market. They may just not be able to find any availabilities which suit their needs and their operation. So as a result, Morris County is seeing a fairly significant increase. On another note, we've seen construction activity across the board pick up to try and meet all of this increased demand. As that construction activity continues, we're seeing developers have to stretch the boundaries of what the same way the tenants had to go to new locations. Developers are having to consider new locations as there's no developable land left in Secaucus or in East Rutherford or down at Exit 8A or in Carteret and Rahway. When we're talking about Morris County specifically, though, it's important to note that while the vacancy rate was 6% in Morris County as a whole, there's a significant number of large boxes of space, functionally obsolete space, which don't match the majority of tenant requirements. The majority of tenants are smaller, mom and pop, not Amazon, not Walmart.com. They're smaller, mom and pop, 10,000 to 50,000 square foot users. So the real market drivers for 85% of the users in the market really follows this chart, which more accurately depicts how tight the market is. Whereas we are at 6%, I said before, for small boxes of space, spaces under 50,000 square feet, the vacancy rate is just over 1%. And asking rates have seen this significant leg up in the past years as we've dropped to these low levels. And finally, just to close on that construction note, what we've done here is map out where all of the projects delivered in 2017 in orange, and then mapped out where a lot of the projects over the next few years are expected to deliver, right, in purple. So what we see is, to my point, developers starting to stretch the boundary and come out west along the highways, and also extend how far south they're willing to go, right, to find new land, to find developable areas. So we're seeing a push into Morris County. We're seeing pushes out into Warren County and down into Gloucester and Salem County.
Okay, and this is in what Iggy was talking about, the demand for space that you can't find, especially what they would call Class A industrial, flex industrial space, or high-tech space. This is a proposed park that's in Morris Plains. That's it's going to be built starting construction in 2018, and it's going to be able to supply those smaller users, for the most part, demand. And this is going to be an image park. It's basically a commerce technical park. And there's very little new construction going on in the county. And this is part of a wave of new construction that you're going to be seeing because of this pent-up demand. And this is part of a project of Vision, and I see Sam and Ross are here. I didn't know that, from Vision. Just want to say hello. And this is their park, actually. So this is what they're planning to do in this year. That's it. We're done. I guess we'll get some questions. We have a question here.
I was wondering, you talked about office space and industry. What about retail space? Like I own a retail shop. Like, how is that going?
We're going to get that.
Oh, later?
That's not our area of expertise.
Okay.
So you have somebody else. Another question before we sit down?
What's the minimum ceiling height for a viable industrial?
New construction or existing? Existing, well, listen, most of the properties that were built, I'd say, in the 60s, 70s, for the most part, have ceiling heights between 16 and 20 foot clear. Then later on, in the 90s, that newer construction at that era is built in 22, 24 foot clear here in Morris County. If you talk along the turnpike, you're dealing with space that was much higher. You're talking, 28, 32, 36 foot clear. But right now, when you're dealing a requirement for basic space, smaller requirements, 50,000 and under, you're talking 24 foot clear and under, probably in that range.
What do you think the prediction is regarding places like Sam's Club or the rest? They're closing a bunch of stores, and particularly out west.
How's that going to?
Yeah, I mean, like, as far as the trend is going, saying that companies are starting to move west more, but they're here and now they're leaving. So what do you think as far as the trend is going? Because now there's going to be vacancy in industrial areas.
Well, so it's when they're closing stores, they're closing their store fronts, not their industrial locations.
Yeah.
There's actually going to be, as much as there's a push out west, as I just talked about, in terms of development and tenant trends having to find space out west, that urbanization of the population is creating an urbanization of industrial real estate, right? So we're spending a disproportionate amount of our time looking at those, what were called last mile infill locations, or locations right on top of the population. Some of those locations, which again are retail locations that are getting closed, malls, for example, are now, because the market's so tight, we're looking at how do you transform those into industrial locations, or can they be repurposed to industrial? The hard part about that is that what makes a mall a good location isn't always what makes an industrial building a good location. So those opportunities are few and far between, but there is some opportunity to do that. Just to give you an idea of supply and demand dynamics, when you're looking for Class A space right now in New Jersey, there's basically a 3-to-1 to 2-to-1 supply-demand imbalance, right? So for every block of Class A existing space or space that's under construction and they be occupied in the next 12 months, there's typically 2 to 3 tenants looking at that same block of space.
All right, we do have to move on, but I'm sure JLL will hang. We'll hang
around.
Okay.
Yeah, sure.
All right. So our next speaker is Michael Elms, and he'll talk about the residential market.
Okay.
Thank you. Thank you. Good afternoon, everyone. As Megan said, my name is Michael Elms. I'm a RE/MAX agent in Morristown. I've been a full-time agent for 16 years. And I'm the team lead and manager of my team, the Elm Street Group, in Morristown. But thank you to Megan and Robert and the entire Morris County Economic Development staff. And thank you for joining us here today, and to everybody joining us on the phone. So here we are, Morris County. We have a population of about 500,000 in 39 individual towns, boroughs, and municipalities. So the overview for today will be some economic and demographic trends of what's happening in the county and also what's happening in the state. Some residential housing market performance, looking at both last year and ahead to this year, 2018. First and foremost, a popular topic, certainly in the last month, 2-3 months, is the Tax Reform Act that was signed into law on December 20th by President Trump. So, some experts were kind of predicting like Armageddon, that that the market was going to take a precipitous drop. There's going to be 10% drops. We're not seeing that. There was lots of things in the Tax Reform Act, but I think for a high tax state like New Jersey and New York, the two big things were the $10,000 deduction limit on state and local taxes, and then also the mortgage interest deduction cap, which is now set at $750,000, which will revert back to $1 million in 2026. So the effect, it's yet to be seen, but both myself and others in the industry, would agree that the housing market is driven by a wide range of factors. And certainly tax consequences are important to buyers, but it's not the deciding factor for people that are looking to buy and for existing homeowners. And then I'll also just mention that for the 7th consecutive year, the U.S. economy has added 2.1 million jobs, so that's great news. It was about 5% off the pace of 2016. So we're going to take a glance, New Jersey and Morris County. For the 5th straight year, New Jersey has won the award for the most moved out of state in the country. This is a stat that is tracked by United Van Lines. They've been tracking it since 1977, and 61% of all moves that they booked were people moving to North Carolina, to Texas, to California, and so on. Robert, I think you're going to play a quick little clip.
They're moving on out, Garden State residents that is, and a study by moving company United Van Lines, nearly 2/3 of moves in New Jersey were outbound in 2014. The company says the study is based on moves it has within the 48 states and Washington, D.C. United classifies states with 55% or higher outbound movers as highbound. New Jersey said goodbye to 4,003 movers, or 65% of outbound moves. So the question is, if they're leaving New Jersey, where are they headed and why? Nearly half were bound for Florida and California. Others moved to Texas and North Carolina. The study says jobs and retirement were among the top reasons for leaving the state. Last year marked the 4th time in 5 years that New Jersey led the U.S. in outbound migration. The top inbound states, Oregon, South Carolina, and North Carolina. For CNBC.com, I'm Landon Dowdy.
Thank you. So that clip was from 2014, but the data actually is very much the same in 2017, 2018. The outbound moves for last year were 61%, which unfortunately still topped the list. New Jersey and Morris home prices are currently at January 2009 levels, about 13% off the peak from 2006. National unemployment is at a 44-year low of 4.1%, whereas the state of New Jersey as a whole is 5.1%. And in New Jersey in 2016, we gained about 59,000 jobs, whereas 2017 saw about a 34% decrease at 39,000 jobs. So what's leading to this? The demographics. The fact of the matter is that there's less and less children in New Jersey. You wouldn't know that by sitting at my breakfast table in the morning, but in New Jersey, we have fewer children. Over a 10-year period, 24,000 less children enrolled in the public school system, which isn't staggering. It's only a decline of about 1.8%, which doesn't seem like much. But if you look at other states, the other states across the United States, that is the exact opposite. Other states have more children and more children in the school system. So right now it stands at 65% of households in New Jersey have no children and only 35% with children. At this, you have 55% of 1 to 2 people per household, 33% have 3 to 4, and 12% with 5 or more. Another stat that is, also very important to point out is that home ownership in general is in decline in New Jersey. Rentership has risen significantly since 2006. In 2006, we peaked at 71.3% ownership. 2017 is, you can see the trend downward at 62.2%. So if you're in the market of developing rental apartments, that's good news for you. But in terms of home ownership overall in New Jersey, it is continuing downward. Oh, I'll also mention that the strongest market for rental apartments in all of New Jersey is Central New Jersey, which is it has a 2.4% vacancy rate, and that's the lowest in the nation. Morris County in northern New Jersey is at 4.2% vacancy rate, and the national average is about 4.5. Now, some of you may have heard of a fellow named Jeffrey Otto. He provides some incredible data and a lot of great stats about what is happening in the market, in the real estate market. So this is a graph that the Otto Group has presented for the last couple of years. And what it shows is that there's tremendous amount of growth and population change along, the New York main train lines. All the towns that are serviced by a train line, Midtown Direct, or have quick access to, say, Staten Island or over the bridges, you see in green, whereas other counties like Warren County, Sussex, and down south are in decline. And I know that last year when I presented, I did a comparison of this urban migration. Last year I did a Madison versus Mendham comparison, and this year I've switched it to Chester versus Chatham. So the Chesters, being both Chester Township and Chester Borough, in 2007 the average home sale was $884,000 with an average days on market of 106. Now, fast forward to 2017, the average sale price is down to 727. Days on market has decreased, which is a good thing. Lower days on market is good news. But the average sale price between 2007 and 2017 is a decrease of almost 18%. Now, if you live in Chester, I'm not saying that your house is worth 18% less than it was 10 years ago, but the averages show that the average sale price was in that range. And if you do the math, that is a decrease of $156,859, which is a lot of money. Now, conversely, in Chatham, both Chatham Township and Chatham Borough, in 2007, you had average sale price of $990,000 and change, 64 days on market. 2017 was $1,098,000 and 66 with 52 days on market. A nice bump of almost 11%, and days on market is down by 19%. Again, it shows you how this urban migration, people that are moving up to $1 million homes, they don't necessarily want to be on 6, 8, 10, 15 acres in Chester and Bernardsville and Basking Ridge. They'd rather be in Chatham where they can go to their Starbucks and go to their yoga class and get the kids to all their activities quickly and easily. And also, of course, jump on the train and head into the city. So the luxury market in New Jersey, I carefully say that it is recovering. In 2017, there was a 12% increase statewide of home sales north of 2.5 million. And in Morris County, a 20% increase. However, I will say that I think the 20% increase is a bit deceiving. What that means is that in 2016, there was 15 sales over 2.5, and in 2017, there was 19 sales, or 18 sales, which is a 20% jump. What this means is that the inventory for luxury homes in Morris County shrunk significantly. It went from an 81-month inventory, which is kind of staggering, down to a 45-month inventory, which is still a very, very long time. To give some perspective, in Morris County, if you're selling a home under $600,000, the inventory right now is about 3 months. And also going back to 2007, I'll note that there was 18 sales last year above 2.5, and in 2007 there were 30 sales above 2.5. Another thing that is very important, and it kind of touches upon the comparison that I was talking about in Chatham, is that of the $2.5 million sales in the county of Morris, 50% of those sales were in Chatham. And of those sales, the sellers got 92.4% of their original asking price. And I'll show you why this is significant in just a minute. Now, does this mark increased market confidence, that people with money are confident that the market is moving in the right direction? They're confident about the political landscape for the next 4 years, or is it just simply seller fatigue? A couple of the homes that sold last year, one I can think of in Mendham was listed 9 times since 2011 with 3 separate agents, and it was originally listed for 6.5 million and then ended up selling at 2.7. So that may just be seller fatigue, where people are like, you know what, let's just wash our hands of this, let's move on, we need to sell this property. Another one in Chester was listed 5 times with 3 separate agents, and again, the numbers were staggering in terms of the original list price back in 2012, 2013, all the way to today. So of the 18 homes sold, the average home traded at 75.9% of original list price. And that could be an original list price going back to, as I said, 2014, 2013. So to put that in perspective, if you listed your home at 3.5, it was sold at $2,656,000. Mortgage rates, touch upon this quickly. You know, the 30-year fixed bottomed out right around September of 2016. Interest rates have gone from about 3.5 to about 4.25, 3/4 of a point higher than the bottom of the market. Now, what that means is a buyer that was looking for a home for $475,000, now that rates are 0.25% higher, they have lost about 9.5% buying power, and they can now afford or get approved for a mortgage of $430,000. Also, for somebody in the upper range of like 825, they now qualify for a mortgage of about 745. The foreclosure market. New Jersey was the #1 foreclosure market in the United States last year and the year before. The system has cleared somewhat, and 90-day past due delinquencies fell to 3.8%. This is down from a peak of 11.4% in 2012. So because we fell down to 3.8, New York now takes the #1 position at 3.9%. The U.S. average is 1.9%. So as you can see, New Jersey is in second place. Again, not necessarily something to be proud of. And we are actually ahead of Louisiana, Mississippi, and Maine, respectively at 3.3, 3.2, and 2.9%. The total number of New Jersey foreclosure filings in 2017 was about 71,000. Those are expected to hopefully decrease in 2018. New Jersey and Morris County values. So, as you can see, one of the first things I said when we started was that we are at about September 2009 values. If you draw a straight line right across there, we're at about 2009. And the average home value of a house in New Jersey is $311,000. In Morris County, 427. So add about 120 grand to that if you want to call Morris County home. About 39% higher than the average statewide. So our market lows, we hit our market low in April of 2012, and the average home value in New Jersey was $262,000, and the average home value in Morris County was $370,000. In 2017, being last year, there was a 4% average appreciation statewide. Morris County saw an appreciation of about 2.8%. So Morris County supply and demand. This is a hot topic right now because right now inventory is very low and demand is high. Morris County ranks number 5 in the state in terms of demand. Essex is number 1. I'm surprised by this. Middlesex is number 2. Union and Hudson, 3rd and 4th. And there are a total of 21 counties in New Jersey. So Morris County has an overall supply and demand of 4.2 months. And as I said, Essex is in first place with 2.9. Cape May in last at 9.4. 2016, Hudson was in first place and Atlantic was in last in 2016. So unsold inventory is at a significant low from the peak of 2007, about a 32% decrease of the 2007 market. So as I mentioned, low inventory. Homes offered in for sale in New Jersey last year, 2017, was the lowest number that we had seen in 12 years. That was 5,000 fewer homes. 5,000 fewer homes listed for sale in 2017 compared to 2016, and 37,000 fewer homes listed from the peak of 2011. State inventory of 4.4 months versus 5.4 months of last year, and that's statewide. So again, inventory is low, and of course, with low inventory, we should be seeing some appreciation. We should be seeing some rising prices. We have had 37 consecutive months of increasing home demand, and this has been consecutive since September of 2014. Morris County had relatively flat transactions, about a 2.1% increase from 2015. That's a typo. That should say 2016, and that should say 2017. So relatively flat, about a 2.1% increase from 4,900 to 5,000. Unsold inventory of 18.2%, which again is low. So 2018 and beyond, the forecast. Home prices still, unfortunately, remain undervalued from the peak in 06, 07. New construction is not keeping demand with the pace of demand. Even though we lead the pack in people moving out of New Jersey, there's still a tremendous amount of demand. We have a very high density state, and there's a lot of demand. Prices are likely to rise as the economy strengthens and foreclosure properties clear the system. And most appreciation, again, unfortunately, will occur at the lower end of the market, homes being 600,000 and below, and still the upper end of the market being luxury above 2.5 is still struggling somewhat, or more than somewhat. And rents are rising faster than household income. Another thing to note is that with interest rates rising, this does have a tendency to spur people into action. They say, "Oh, geez, we should buy now. We have to buy before rates spike up." But the thing that may temper this and may kind of create a wash is the new tax laws and how the overall general population reacts to the new tax laws. That just about wraps it up for me. Thank you, everyone, again for joining. If we are going to share the entire presentation for everyone, so that will be sent out. And questions? Yes.
Hi, I'm actually the mayor of Chatham Township.
Oh.
That slide was particularly painful, but...
Okay, my apologies.
Do you see, I just read some research a couple days ago that was maybe a little contrarian. I know that people are choosing urban environments or towns that offer urban amenities, but what do you think about as the way we deliver goods and the way we work? We're not necessarily having to drive places or go places. Do you think that that will
work in your favor?
Yeah, that we might be willing to stay where we are, not take into account transportation or walking,
right,
because it's easier to do business work and get goods maybe 10, 15, 20 years into the future. Have you heard anything about that?
Certainly. Everyone I know has a Amazon Prime account. I mean, there's no doubt that that's the direction that things are headed. So that very well could work in your favor in years to come. Right now, I'm just talking about 2018, and in the next 18 to 24 months, I think I'm going to see that people are not looking for the 15 acres in Bedminster anymore. And these baby boomers, people that are looking to downsize, they're like, we want to sell our house. Where is everybody? So it's a problem.
I always say people are putting a different value on their time that maybe we did. I'm in my 50s.
Right.
Dad drives an hour and a half. We spend a lot of time
Sure.
doing maintenance.
Right.
We see our property. And younger people, and maybe even some of us older people retiring, are saying, I don't want to do that's not how I want to spend my time anymore.
Right.
So,
Right.
Yeah, it's fascinating.
I had an interesting conversation with my dad over Christmas break. We live in Morristown. I'm a Morristown town councilman, and they're planning on building a new parking structure in Morristown, right down by the train station. And the Morristown Parking Authority has put a lot of time and a lot of effort into thinking about this new parking structure, whether it be 500, 600, 700 car capacity, looking 10, 15 years ahead, because as we start to have self-driving cars, are we going to need parking garages 15 years from now? And I had this conversation with my dad, who's 73, 74, and he was like, "You're crazy. People are always going to drive. There's always going to be a need for parking garages." I'm like, "Dad, no, this is happening. Like, this is happening in the next 3 or 4 years, and it's going to be a major shift." So things are definitely changing, and we'll just have to see how it plays out. Thank you. Thank you.
Next, we have Mark Hayes with Danbury Development to discuss retail. And why you love Morris County.
Right.
You're always from Ohio.
All the way from Ohio. Right.
Okay.
Megan, Robert, thanks for having me today. Hope everybody is enjoying the presentation. I'm here to talk a little bit about retail. As Megan had mentioned earlier, I'm a partner at Stanbury Development. We are a retail developer. It's historically what we've done. Within Morris County would be most known for the development of a small shopping center up on Route 10 in Denville, the Shops at Union Hill. If you guys happen to know that, where the Starbucks and the Banana Republic is. That was a center that we developed many, many years ago. For no real reasons, I was just chatting with somebody about that a little bit ago, actually sold out of that project about a year and a half ago. And hopefully at some point in time, within some reason in my life, we'll be talking about what else we're known for in Morris County, because we're working on a sizable development in Parsippany on Route 10, just across the street from the Mac Cali office park, that hopefully next year, if you'll have me back, Megan, I'll be giving all sorts of great updates on. Unfortunately, a year passed from last year, I'm not able to do so. But so we love Morris County. We love Morris County for a lot of the reasons that we kind of discussed. You know, there's a good population. 500,000 people live in Morris County. Average household income, median average household income is super high, depending on which day of the week it is and who conducted the survey and what kind of data they used that was extracted from the census. And, Morris County typically is somewhere right between 10 and 15 in the nation in median household income. So by all measures, that way is a pretty wealthy county. There's the median home price in Morris County is pretty high. It's running right around $450,000. So there's disposable income here. There's very high education levels. The interesting thing for folks like us, and when I say folks like us, I mean like a developer from outside the state. We look at Morris County, we see these statistics that would make just about any developer's mouth water, right? You look at the infrastructure and you see 80 coming across the top and 287 slicing through the county like a spine, and 24 and Route 10 and all the different thoroughfares, and you're like, wow, it has such great access from so many places. It's really quite especially that 287 corridor, maybe not out in Mendham or in Chester, but that 287 corridor is very regional and very easy to get to from a lot of places. But as we all know, when it got developed, 40 years ago, everybody was seeing corporate America moving out of Manhattan and building big office parks because they could. And so a lot of what we have there isn't really retail based, it's office space. As our team from JLL was noting, we have a glut of office space at this point in time. Stanbury Development is trying to help with that. We'd love nothing more than to tear down 300,000 square feet of vacant office in Parsippany. And I think there will be a repurposement of that over time. There is a calling for it, and there's an absolute need for it. So whether that, when you look, there is a lack of developable land. And when you look at it and you say, boy, there is demand for multifamily, there is demand for mixed use, there is demand for walkability, there is demand for industrial and other things, the natural move should be, don't tear down more trees and green space to accommodate it. Repurpose some of the developable property that you already have. So hopefully we do see kind of trends in that direction over the next number of years. From a retail standpoint, it's a little bit. I think it's a little bit like the presentation on office. You know, what I would tell you is just generally speaking, when you're looking at the statistics, occupancy rate or vacancy rate, total square footage, all that stuff, nothing has changed too significantly. Morris County's running at like 6.5% vacancy rate in retail, which is good, especially in today's climate. You know, as we're hearing, you know, the headlines more and more, the closure. So I think just the general public would think that means, declining, you know, or increasing vacancy rates, and you really haven't seen that. The good news is, because there isn't a ton of retail in Morris County, and there are really strong demographics, you are seeing a lot of the vacancy getting repurposed, and I have a couple of examples of it. And so there was a little bit of net absorption this past year, but it was like 10 basis points. It wasn't enough to really move the needle or you know, be a real cause for you know, just for you to sit up and take notice. You know, what's kind of driving you know, a lot of the growth in retail is without question grocery, which is a little bit kind of funny because we just talked a minute ago about how everybody's buying their yogurt online now or whatever, right? So, but the fact of the matter is, and I think the biggest sign of this is Amazon, is as much as it's moving in that direction, there is a place for brick and mortar, and there's a place for brick and mortar in certain categories, and I think grocery is definitely one of them. And that's not to say you won't see grocery change and morph over the next 20 years. You will. But the singular example of Amazon buying Whole Foods, I think, gives you as big an indication as any that bricks and mortar grocery is not going away. It's going to change, and maybe a lot of the 90,000 square foot massive Stop and Shops will become something a little smaller in the future. And maybe there'll be more delivery, or maybe there'll be more pull up to the door customer pickup and not having to slug through the whole place to buy your groceries and doing some of that. But it isn't going away. If it were going away, Amazon clearly would not have made that move. And they don't, you know, as much as that helps them with pricing power, they didn't need help, right? Like, they're the one person on the planet who didn't need help that way. So we have Morris County. I'm just going to touch on a couple of the key retail kind of goings on that we've had this past year. My apologies in advance to anybody who I missed. I'm sure I missed somebody. But here's a couple of the major ones, and they're in no particular order. You can see my little numbers scattered around the central part of Morris County there, really in no particular order. The first one, though, I thought was kind of interesting. This one I put in here really is for two reasons. The first is, you know, talking about vacancy again. Oh my gosh, you know, the office supply guys are closing, and what's the future have in store for bookstores and sports authorities going out? And oh my God, we just heard about how Toys R Us is going to close 180 stores. You know, the headlines are always real big, right? Well, guess what? Sports Authority left. DDR, who happens to own the center in East Hanover, was happy to see them go. They weren't doing well. It was an old, tired store. And guess what? They came in, they did a Sierra Trading Post, they did a HomeSense deal. That HomeSense store is great. It was one of the first 4 in the country, right? Both concepts, by the way, are owned by TJ Maxx. TJ Maxx is clearly one of the winners in retail today. And they have been for the last 15 years. And so TJ Maxx came in. They already had a Home Goods there. They already had a store in this plaza. Came in, opened up 2 more, and are very, very happy. Very, very happy with that. So again, for much of Morris County, you'll find vacancies here and there. I'm not going to say that, that there aren't vacancies and that every center is just, it has a line of tenants waiting to get in. That isn't always the case. But overall, Morris County is healthy in that regard. And I think when you see vacancies come online, unless there's, a real reason for it kind of outside the norm, you'll see them fill in reasonable time and at reasonable rates. Hanover Crossing. If you guys, real quick, just referring back to the map. So Hanover Crossing is just kind of south of 10 on Ridgedale Avenue. If you are, kind of between Parsippany and Morristown. New shopping center, newly built this past year, opened. And again, you have TJ Maxx and you have Home Goods. 2 more TJ Maxx stores coming to Morristown. They opened 4 stores in Morris County last year, right? They're, again, clear winner in this retail kind of battle that's going on. Old Navy's doing very, very well these days. Five Below is doing very well. The one tenant that you can't see off the end that's as strong a story as there is right now is Ulta. Beauty as a category is doing tremendous right now. Sephora, Ulta, Lush, cosmetic shops doing fantastic. That's I was talking to my wife about this, who happens to be in my business as well. And I'm like, and I sat there and I'm like, it would seem to me as a guy, right? I get it. So as a guy, I don't know if the other guys in the room would agree, but you said like cosmetics would almost seem to be the easiest thing on the planet to order online, right? You use it, in some period of time it goes away. You need it replenished. You can almost just set it up. Just send me this, and this every 3 months. I'm good to go. I don't have to step into Ulta ever again. My wife's like, man, you have no clue. And she was referring to something else, but then she got back to the fact I had no clue on that either. But she's like, look, it's always changing, right? And whether it's beauty products or cosmetics or whatever, and they aren't doing that by accident. And so different shades and different this and different that. You go in and you got to learn about it. So anyhow, but beauty's doing great. Five Below is doing great. Dollar stores are doing great. There's a few categories. The off-price guys, Ross, TJ, Nordstrom Rack, dollar stores. So whether it's Dollar Tree or Five Below or others, are doing great. Beauty's doing great. They're kind of, and then the mass merchants, Target's doing well. Walmart's killing it right now. Kohl's had a pretty nice little comeback year. They're saying JCPenney had a pretty nice little comeback holiday, so we'll see if that carries on. But one of the things that they're saying is those guys where the value that you can find in the store is greater than the value you can find online are staying strong. And I think that's the message for TJ Maxx is you can't go online and find that blouse cheaper online without spending 6 hours trying to find it as you can go into TJ Maxx and find it, right? The losers are your traditional department store, although this holiday season did show a little uptick there, so they're all feeling a little bit better about themselves this January, but over the long haul, it just doesn't seem like they're going to be, the winner there. Mall-based retail, women's fashion in general, has just had a really tough go of it. All the traditional kind of retailers that you might think of that you find in the malls. So whether that's Limited or Limited Express or Chico's or Talbot's or whatever, they're all kind of struggling a little bit. Toys R Us, the toy category is a really tough one. That's one that you can really see impacted by online ordering because I was just telling some, Barbie's Dream House there's one of them. It comes in pink. It's got a gold star on the top. It comes in a box. A lot of times those boxes are kind of big and bulky. You don't really want to have to carry them out to your car. It's a really easy thing to go online, click, and have it sent right to your house. Kind of no fuss, no muss. So the toy industry is a little bit, kind of in the crosshairs. And then Sears Kmart clearly is circling the drain many years ago, before they were as bad as they are now. And I think some people still had hope that they could figure it out when those two companies merged. I remember I was in New York at a conference and listening to a speaker, and he compared Sears and Kmart as the two drunks that walked out of the bar and leaned against each other as they walked down the street. The only thing keeping them from falling over was the other, and I think that's kind of playing out. Ledgewood Commons. So I put Ledgewood on here, not because I have a great update on Ledgewood, but the interesting thing on Ledgewood is they tore down the Macy's box, right? So here we see TJ opening up 4 stores in Morris County in the past year, and at Ledgewood they tear down the old Macy's box, right? So I think it's a little bit of a snapshot of kind of what's going on, out in the world. New Cheesecake Factory came to Rockaway Town Square, so that's kind of a nice little thing. The new Wegmans, of course, the new Wegmans. So Wegmans as a company is very, very happy with this store. I know the real estate people. About 4 weeks ago, I was on the phone with my friend who's over there. That store has been killing it from day one. No one in this room is surprised. If you go there at any hour of the day, any day of the week, the place is ridiculously busy for what it is. And you can see all the people that were there for the grand opening, and I think if you went there right now, there'd see just as many people. It's crazy, but they're loving the store. It's killing projections, and they're very, very happy, and hopefully the people of Morris County are very, very happy as well, because Wegmans does a really fantastic job. I mean, they were just voted. There was just literally a week, in the last week, maybe a week and a half, there was Wegmans and I think it was Publix were voted the 2 best grocers in the United States, right? So Waterview Marketplace has started construction. So those of you that know Waterview Marketplace, it's up in Parsippany on Route 46. It's going to be a Whole Foods anchored center. So again, there's a little theme here with grocery and off-price and stuff, right? But that's just a little lease plan. 46 is down here at the bottom. Whole Foods has been signed to that project. They're very close, I think, to naming a couple of other tenants at the project. Shake Shack has committed there, which, again, was a little bit of a sad moment for me. We had targeted Shake Shack for our project on Route 10 from day one, and just because, delays and things, Shake Shack finally, we sold them on the market, and then they just went someplace else. So, so that was a little sad, but that's all right. Target is joining Troy Hill Shopping Center. So the old Pathmark up on 46 if you're available. Again, Pathmark went out. Federal Realty, who's clearly a very big national player and REIT and has a lot of strength. That Pathmark wasn't. I don't think it was closed for 6 hours before they were announcing this deal. Basically, I mean, they knew it was coming. They had it all teed up. Again, a little bit just talking to. There is demand here. Retail is alive and well in Morris County, and then District at 1515. I forgot to put it on the map originally, but that's because it's just 2 vacant office buildings today, and none of you guys would really know them. So here comes my shameless plug. You ready for this? District at 1515. That is what we want to build. So write your council people. Well, no, only if you live in Parsippany. But and if you don't, you can write them. But so anyhow, this is what we want to do. We are looking at, it's on Route 10. It happens to be 1515 Route 10 is the actual address. So that's kind of where the name was derived. But we want to tear down the 2 office buildings that sit there. They sit right on Route 10 right next to the jug handle at Dryden Way, across the street from the Hilton. Delta Dental office buildings right next door to us. We want to take those 2 ugly buildings, tear them down, and build this. This is a collection of restaurants and retail space and services and your yoga studio and your spin studio. And and a place where you can go grab a nice glass of wine and just hang out and enjoy the open area and the open space. Very pedestrian friendly. Will be full of family activities, farmers markets, other stuff, movie nights on Wednesday nights, whatever it is, right? And then some multifamily product as well that we feel the area needs. You know, all that office needs amenities more than anything. That's one of the reasons why Wegmans is doing so well, right? And all we want to do is tear down office and provide amenities. That would be great for the area. It would allow people to live a little closer to work, provide kind of a cool area in which to do it. You could go right downstairs, get your cup of coffee, you know, go take your yoga class, go take your spin class. So hopefully we're getting there. And that was really kind of what I had for you today on Morris County and on retail. So
we have time for one question. Anyone have any questions for Mark? That's it.
So, retail is clearly not dead, but one thing that was not part of it was the independent business owner.
yeah.
So the mom and pop type shop. I'm curious if you guys have other properties around the country. Are there other regions where there's more of a presence of the independent business owner, or are they priced out of those markets too?
No, what I would tell you, just generally speaking, is there aren't other places in the country where you see more of that than you do in New Jersey. Quite frankly, in New Jersey, you really still do see, and this just might be my perspective, right? You actually see a fair amount of that. But the really cool thing about New Jersey that doesn't exist in a lot of places is you guys have these really great organically grown downtowns, right? So when you think of downtown Morristown or Chatham or Madison, there's these downtowns, and there are mom and pops that are operating in those downtowns, whether it's the, you know, whatever, Braunschweiger Jeweler in downtown Morristown, or the little mom and pop owned coffee shop or pizza shop or whatever it is, or boutique. So I would actually argue that Jersey has a little bit more of that than a lot of places do. You just don't see it in the bigger shopping centers, is where we'd want to provide that in our center a little bit, because we think it actually provides a really interesting point of differentiation. And don't get me wrong, there's going to be retail that is going to be failed and hurt and everything else. One of the things that is going well right now is there is a movement back to the mom and pop, but they got to be doing it right, because there is a customer that is willing to pay. They're willing to pay good money. They're you know, all that, but they want the service again. They want to kind of feel like that people, you know, pardon my French, but kind of give a crap about them, right? They want to know that they're going to pay decent money for something, that the salesperson knows them and other things. And so you're seeing more and more kind of success with local boutiques, with startup little restaurant businesses, with you know, kind of franchise businesses and chain businesses and stuff. And I think you'll see that trend continue, because I do think when people are when that female, because it's not really about us guys, as we all know, when that female is spending those dollars, she wants to feel like she's getting something in return, and it isn't always just that blouse or whatever. It's a little bit of just feeling good about the customer service and the other things that you're getting.
Great. Thank you, Mark. All right. And lastly, we have Christine Marion, Director of Planning for the county, the demographic overview.
Great. Thank you. How much time do I have back?
About 15 minutes.
15 minutes. I win the award for the most slides and a lot of information I'm going to present today. Mark gave a great overview in terms of statewide trends. I'm really going to focus on Morris County and Morris County trends. So here we go. Again, as you heard, a lot of things are happening in Morris County. Our peak growth years were between the 50s and 60s, when a lot of the boomers were born. Boomers were born between 1946 and 1964. And subsequent to that, that's probably when all the development in terms of the office market, employers started moving out. Here, again, a lot of employers, like you heard, they follow where the workforce goes. Again, our growth rate currently is leveling off. You heard we're about 500,000. We haven't hit that market. Just when we think we get the current state estimates, we're going to hit it in 2015 and 2016, the state comes out with, revised estimates, and we're always kind of pushed down, so we haven't hit that 500,000 yet. But we're always seem to be in the middle of the pack in terms of population growth. As you heard, there's many of the urban counties are booming now. You can see that on the left of the chart, whereas a lot of the rural counties are losing population. Morris County, however, again, more in the middle of the pack. We're still growing, but slowly. In terms of future growth, the state puts out both projections and forecasts, and we're probably somewhere in between in terms of that to 2034. Again, we're probably closer to that pink line than to that blue line in terms of growth. Of course, unless something changes. If trend changes, we could go higher. As was stated before, the number of school children is going down, and why is that? Well, our birth rate is dropping. But if you notice, the state is in red, Morris County is in the blue. There's a little bit of an uptick here. Now, is that going to continue? Have millennials start to reproduce and make us baby boomer grandparents? We don't know yet. We'll wait and see. There's another chart that you see. Maybe this is something that's actually starting to happen. What's driving our growth? Largely it's international immigration. As was stated, we're number one in people moving out of the state. Morris County is leading to that. We lost almost 11,000 people between 2010 and 2016. However, international migration compensated for that. So we grew from a migratory perspective about 1,000. And as we said, national increase, more babies are being born than people actually passing away. So national increase is still up there, so our population is still increasing. Where are they going? In terms of people, most people, and this is again, people who moved in Morris County within the last year. This is from, again, the Census Bureau 2016 demographics. So 47.2% of the people who moved in Morris County stayed in Morris County. In terms of from Morris County too, you'll see those numbers are the same. It's almost 18,000 people. And most of the people who are coming to Morris County is still from the east. So Essex County, Passaic County, Bergen County, Union County, and even the far east, Asia. So that's one of the major contributors to population, or to movers into Morris County, and again, other. Where are they moving to, moving out of? Again, and percentage-wise, these numbers are very slow, but it's pretty much scattershot, again, to the west and to the east. So you see Essex County and Passaic County on both charts. We're still bringing in more people from Essex and Passaic than are actually moving out. Again, and to the west and a little bit to the south. Okay, and again, population just by municipalities. As we say, we have 39 municipalities, and you can see those, again, they're estimated to have lost population, includes Benham Township, Mine Hill, Victory Gardens, very low population, Kinnelon, Pequannock, and Lincoln Park. And I could say for, Lincoln Park, Pequannock, a lot of that had to do with the flooding of Irene and the purchase of homes and them being demolished out of floodplain. Again, our growth towns, largely due to development. You see a lot of multifamily apartment and development occurring. So there's a large project sales in Mount Arlington, Mount Olive, Hanover Township, Morristown, and even Mountain Lakes. Again, population, we are becoming more diverse in terms of, we see a continued decline of white population, but the big growth population is Hispanic and Latino, which is actually ethnicity, not a race. That's continuing to increase, but the Asian population even more so into the future. Again, these are state statistics. We're getting older. Also to Morris County. Morris County has one of the oldest median ages in the state. We're currently at 42.4. And I saw an interesting column by Colleen O'Day, which looking at our older population, which was kind of a surprise that half the people aged 65 to 69 are still in the workforce, either working part-time or full-time. So think about that. So she had a whole article if you want to read about that, and even over the age of 70. So it seems like people in this area, are they working longer because they need to work longer, or are they working longer because you want to work longer? We are more young at heart. We're better fit. People are living longer, so people are probably even choosing to work more. So that's our workforce. Never married, again, related to family and family creation. We're seeing that Between 2000 and 2016, the number of people who are married is actually decreasing. Again, never marrieds are up there. The millennials are not hooking up quite yet. This is the other chart that I found interesting. For a while, we were seeing, this is the household size. So the light blue one is what constitutes the largest number of households in the county right now. Over 50% consist. Think about it. Think about our housing stock with largely single-family homes. Now we're seeing a lot more multifamily, and you can see why. What's driving that demand? It's 1- and 2-person households. We're overhoused in terms of the match between the type of housing we have and the size of the household. So we have a lot of people, single people, rattling around in those 3- and 4-bedroom homes. So, but we're starting to see, we kind of peaked in 2010 at 54.3%. We're starting to see a little bit of a decline. Or we're starting to see an increase up, which is another third, is a 3- and 4-person household. So we're starting to see an uptick in that. Does that mean either are we having kids, are people starting to have the kids, start to fill those houses, or are people starting to live together because the housing is so expensive? So we really don't know what constitutes those households. We really didn't look into that. But the number of 5+ person households continues to decline. Okay, as I mentioned, the houses are still getting bigger in terms of the number of rooms. It's expensive to develop in Morris County, so you want to have bigger houses. So the number of rooms is still at 6.7, but our average household size is about 2.68. Over time, the housing stock is starting to change. You can see at one point, back in, I have to look at my dates, 1980s, housing, 3/4 of our housing stock, the single-family detached, we're now down to about 2/3. What's starting to increase is the multifamily, the apartments that are being built, and single-family attached, which are the townhomes. Housing values. Again, we're one of the highest in New Jersey. It's Morris and Bergen sometimes. We're neck and neck with them in terms of housing prices. New Jersey's in the middle there at $328,000. Cumberland, South Jersey has the lowest prices. So you can see across the state where we sit. And again, as mentioned, our housing values haven't quite recovered yet, and you can see the areas where change in median value. Now, just a caveat on these statistics from the census, this is as reported by homeowners, not based on actual sales. So in terms of reporting and sampling, you can take this with a grain of salt, but again, goes to show where the housing price is actually increasing. Again, it's in it's in the eastern portion of the county with easy access to the trains, and it's interesting that Mendham shows an actual increase in housing value. Again, take these statistics with a grain of salt. Again, not surprising if we have high housing costs, the rental market's hot. We're #1 right now in terms of rental housing costs, in terms of the state, in terms of statistics on that. Not surprising, in order for to live here, you need a higher income. Again, we run neck and neck with Somerset, Morris, and Hunterdon in terms of median household income, which is currently at $106,985. But counter to that, we have a lot of high-income households. We also have, we can't forget those at the other end of the spectrum. 20% of the households are considered below median household income, and United Way's ALICE report, which is Asset Limited Income, these are essentially a working poor, constitute a great significant proportion of Morris County. We have one of the lowest poverty rates in the state as well. Again, if you look at the blue line, is actually a housing values. The red line is income, and the yellow line is our interest rate. So this is an interesting chart. And so we start back in 1970, where we see housing values and income are not that far apart. Interest rates are starting to tick up. But as interest rates started to go down, housing values started going up, but our incomes have not gone and have not kept up with, again, housing value. So we start seeing a little dip, as we cited before. Housing values still have not caught up. So based on the bottoming out of the market in 2012 and 2008. Again, high income, you're going to expect higher educated workforce. Again, we're number one currently in the state, with over half of our population having a bachelor's degree or higher. My staff decided to put this one up in terms of how people get to work. We can see that people who actually commute alone is actually dipping a little bit, but also the number of people who carpool is down. Work at home is going up a bit. People are using more public transportation, not quite sure who's doing that. People who walk to work, going down a little bit, and other means, I don't know if they're flying or going to work, however they get to work, that's down a bit too. Where Morris County people work. Morris County is an employment center. We bring in our workforce. So you can see most of the people who live in Morris County, well over half work in Morris County, and then about a little bit greater than a third still work in the state, and about just over 7% work out of state. So it's probably most likely those Manhattan commuters. About half of Morris County jobs, however, are filled by out-of-county residents. We actually have to import workers. We do not have enough of a workforce in Morris County to fill all the jobs. So over half are filled by people coming out of county, out of county and out of state. Okay, relative to the United States and New Jersey, Morris County's current unemployment rate is lower than that even of the United States, whereas the state is higher. So in terms of unemployment, we're low currently. And this is another statistic that was one of my staff put together. So if you look at most of the businesses in Morris County, they have fewer than 20 employees. So 82% have fewer than employees. Only 3% have over 100 employees, and 6% about 500 plus employees. However, if you look at those that actually have the most employment, it's the big guys that employ the most Morris County residents. So 500 plus employees, 54%, like 54% of Morris County residents. Okay, by occupation. Not surprising, again, with the income, with the education levels, most of the occupations are going to be in those higher earning occupations. So management, business, science, and arts, both as 2000 and 2016, followed by sales and office. And the top private sector industries by employment, again, look at the income, so higher incomes, professional and technical services. And then, surprisingly, next largest employer, healthcare and social assistance. Again, with the aging population, the healthcare industry going on. Again, decent salaries. Then we dip down to retail trade, accommodation, and food services, and administrative and waste services. Top growth industries, again, this is from the state. This is date back to 2014. I would say take this again with a grain of salt in terms of future employment. Again, healthcare and social assistance, probably not surprising, that will be a large growth area. It continues to be that way. Wholesale trade, construction, and what we've probably heard with industries, we're probably going to see more in that sector as well. Sectors continue to decline, management with consolidation, information technology, government, and manufacturing. This may be a change, though. You may see a change in those projections. So summary of findings, population continues to grow slowly. We're getting older, we're getting more diverse. International migration will continue to be important, a driver of this population growth. Highly educated workforce, higher incomes, higher salaries, housing value income ratio, will that continue to expand? Most companies are small, but most employment is in large companies. And anticipated job increases in the future, probably many will be lower salaried. If we continue to replace those older offices with, let's say, the BJ's and the retail sales, which don't pay as much as the office jobs and the manufacturing bit. That's all. Any questions?
All right, well, thank you to all our speakers for that time. Thank you for coming today, and I'm sure our speakers will hang around if you have any additional questions. So thank you. Have a wonderful afternoon. Of course we do.